everyone, John Henry here, slingshotfutures.com. Today we're going to be going over the weekly market outlook and also just kind of covering the way that the charts are actually made. Now generally when I come into a new week, or if there's a contract rollover or something important happens, I generally like redrawing everything, right? Going through, redrawing the channels, drawing the fibs, just kind of cleaning the charts up. It's really easy to have a super cluttered chart by just having a bunch of old drawings that you don't really care about anymore. So here we can see crude oil is ready to go and it looks nice and neat. There's a few lines on there that were of interest, but you know, just going over the overview of crude, and then we'll go into the S&P and we'll start scratch and then draw from there. So crude oil, we're having a very strong lift to the upside. They rejected the 51 area with a lot of support. I mean, a lot of support coming through that 51.50 all the way down to 50.50, basically that dollar zone. And the buyers are showing a lot of strength. Now, if we zoom out a little bit, we can see that this is on the backs of a very extended bear move down, right? They fell off of essentially the 70s all the way down to the 40s, and now they're starting to rebound a little bit. We're kind of in the middle, well, close at least. Now, drawing a fib from the top to the bottom, we have a bear 38.2, which was right there. It did respect for a while, holding the market down, but after they got that little inside trap low, that was basically all it took, and now we're off to the races to the upside. So really what we're looking for in crude is more continuation to the upside, probably gunning for that 50% retrace on the sell, but along with that, we do also have some objectives to the upside here. Generally speaking, whenever you have this consolidation like this after a really strong rally up, one of two things could be kind of keeping an eye on. Now here we have a really strong finalized dive to the downside and then a rip back higher. And arguably a lot of that dive happened right here, and even arguably more right there to there. So what we can do is we can actually measure that move, right? So we can go from the lows, and this is just rough, but measure the lows to the highs of that final push down. And generally speaking, what we're looking for when we have this type of situation is a market responding to a negative 618 as well as a negative 100. So those are really the only things we care about. So if we jump out here, get rid of all the other stuff, those don't matter. So we can get rid of that. Let's go for a negative 618 and the negative 100. And then just so we've got it a negative 200 just to be safe. So those are the only ones that we really care about in this regard. Whenever you have that really strong V bottom move where it goes flying the other way, that final leg can be a large area of interest. So if we draw that up, it's pretty easy to see, but I'll make them thicker here just so they stand out. The negative 618 is right here. We'll make that a thickness of 7, just something that's obscenely large just so it stands out. There we go. So we can see once they hit the negative 618, that caused a lot of congestion, support, and resistance for a very, very long time. And then when they hit the negative 100, that was a pretty straightforward rejection, the initial test. They tried breaking above it, using it as support, same thing they did with the 618, and now they're trying to break through that. So now that we have this zone, this is where the sellers had their chance to regain confidence and shove the market down. And now that this is failing with this rally above, we're looking at some pretty strong movement to the upside with projections up to potentially the next one, which would be the negative 1618. So if we add this on there, and we'll just add negative 1618 right there. That's the objective at the moment, this big thick green line, and that's right around that $58 mark. So that's kind of where we're looking for the market to want to rally up to next if it's going to continue this up move all in one shot. Now, it is always a little bit of a concern when you have such a really, really, really strong move to the upside without any pullback because, well, frankly, it just gets overextended and needs to pull back on itself. And that's kind of the situation that we're looking at right now is they are getting pretty weak. I mean, there's a ton of wicks on the highs. This is a very strong rally up. And usually what we're looking for with a unidirectional push is a 3-push move, right? Meaning that you have push 1, 2, 3, sometimes a retest, and then it starts pulling back at the sort of the end of that short-term trend. If we look at this move up here, we can see pretty obvious. We've got 1, 2, 3, and then a 4th push, but then it pulled back and kept going. So in reality, we could consider this whole thing, this might be 1, and now we're on 2, and we would be looking for a 3rd move up, and that does kind of fit the bill of what we're looking for on crude at the moment. So still looking for more bullish continuation, but we are pretty weak up here. There's a lot of wicks showing up. Arguably, you even have a 3-push wedge top on the highs here. Could be looking for maybe one more test into the negative 100 fib. But really, we're looking for a pullback, right? It's really hard to want to buy way the heck up here when there's no pullbacks at all. And generally speaking, pullbacks, I want to see at least a swing low broken, something. And that would be right there, even down here, which would be a retest of the previous swing high. Something that's just a little bit deeper. Now, we did have a gap up and a pullback, so that gap up could create an area of interest on a pullback there, which does line up pretty well with a retest of the negative 38.2. Now, obviously, the sell side's not doing so great with that 38.2 anymore, but a lot of times when those resistance zones break, they become support. So we have a break of resistance turning into support and a bullish 50% off of that gap move. Everything's kind of lining up for support coming in at around that 55.50 area to continue this rally up if they can actually get a pullback. If they want to just keep going, we already know what the objectives are up into that 58, but we'll have to wait and see if they want to give us something a little bit more obvious to work with. So now that we have the crude oil outlook done, all we have to do now is just kind of clean off, and you can see how messy this can get, right? Look how messy and nasty and gross this S&P chart looks. So what we need to do is we need to clean it up, right? So we'll just delete everything off of the screen. We'll do the same for the Dow. We'll do the same for the NASDAQ. And just give ourselves a fresh start, right? So if we set the snap mode to bar in price, it's the easiest way to make sure that it's snapping to the right thing. And then we just need to draw off of the lows to the highs. So we start with the lowest point that we can find and work our way forward and find the highest low that it actually fits on, right? Now, sometimes you do have to zoom out a little bit more. This one's a little bit tough because it's such an extreme V bottom. We just kind of talked about that. But with such an extreme push down and then a really strong rally back up, drawing anything from this low is not going to fit very well, right? Drawing it here, that's way too steep. Here, still way too steep. You can see they're still respecting it when the market comes back to it, but it is certainly not the best place. Really what this kind of tells me is that we need a deeper pullback so that a lot of support can get anchored on. Right now, the most recent support is going to be right there off of that low. Am I really pumped about it? No, not really. I think it looks like crap, but that's the only thing that the market is giving us. So now that we know that it does look like a weird angle, that basically tells us we've got a green light to draw it that way. So we'll draw off that low. We'll go to the next low point. Was it this one? No, it was this one. So we'll anchor it there, and now we have our rising low all the way from the bottom. Now, more likely, this looks like a spike in channel, and the spike in channel has that spike up, and then it begins channeling. So we're not necessarily forced to draw a trend line off of the low like that. We can look for something that's a little bit higher. So that looks to fit right there pretty nicely. So if we draw that out as well, let's see if that lines up. Well, they are finding some support there too, so let's draw that forward. Get that there. Perfect. All right, so now we have two rising levels of support that do make sense. We also need to find some resistance. Arguably, the most obvious peak high is this guy right here on this swing up, so we'll draw from there. And we'll go to the next high right there. And that gives us our level of resistance. We are currently testing it right now. Today's a holiday, so it's not necessarily holding it. Maybe it is, maybe it's not. This is just sideways price action because the markets are basically closed. So it's hard to gauge whether or not this is a good one, but it does fit, and we are there right now, so that's a nice level of resistance. That's a rising level of resistance, so we need a falling level too. So if we zoom all the way out, it should be pretty obvious to see. We want to find the highest peak, and it looks like the highest peak is going to be inside of here. Now, whenever you have this kind of congested high, we've got to get the, come on, right there, there we go. So we'll draw across those highs there just to see if eventually that might give us a level of support, but we just kind of fan our way down, right? We have our primary point, and we draw to the next point there, and then we draw to the next point there, and the next point there until we finally have all of the trend lines needed. So here we're going to go back to that high, if I can tag it, there we go. And we're going to keep going forward. So we'll go forward a little bit more, and we'll draw it up to the next major peak. Now this one has already broken, as we can see. They broke out right there. That was a nice level of resistance, broke out, tried pulling back, holding it as support, and then went rallying away. So now what we can do is, because this is already a broken out and pulled back level, we can go to the next major high. This is certainly not the best high in the world because it's not really much of a pullback, but it is better than nothing, right? That gives us something to work with in terms of falling resistance. Now, it is kind of hard to ignore this level kind of coming through here, too. It's pretty obvious. So whenever we have a situation that's like that, where it's just, oh, okay, well, it looks like something's going on there, that's where we want to draw that one up as well to make sure that we have them all ready. So that way, if the market comes back, we'll have to wait and see. We've got a little bit of a ways to go, but see if the market wants to respond to that area, too. Now that we've got that, we'll draw from the highs. We're looking for the fibs next, now that we have our structural backbone. So let's see here. I need to pin on the highs right there. Yeah. And we're going to go all the way down to the lowest point that we can see. Now for me, I have a bear template, which is essentially just all red, and that gives me an idea that we are breaking lower and showing signs of bearishness. So what we want to do is change that all to red. There we go. And now it's pretty obvious, right? Although we do have a red background, right? It's bearish. We're breaking through a lot of levels of resistance. The 38.2 held for a little while, but then broke through. The 50% didn't even hold. It just broke through it and used it as support later on. The 618 held the market down for a little bit, broke out, kind of chopped around for a little while, and now we're rallying higher. The 786 is next. So now that we know that we've basically ripped through all of those, we can get them off the chart, right? We're trying to clean up the chart so it's not such a mess to give us something to work with here. So the 786, that's the next one that's going to be of interest. Now, as we go in a little bit further, like we were talking about on crude oil, whenever we have a really strong V-bottom move like that, we want to keep an eye on a potential negative 618 to negative 100 move and see if the market is responding to those at all, just to see if we have the right one. So here is the negative 618. That was a very nice response there, so that's looking good. And then when it got up to the negative 100, it just kind of ignored it. So it looks like they're losing a little bit of grip on that one. Not really going to pay too much attention. So now that we know the levels of resistance above us are done, in terms of falling levels of, fibs and all of that, now we can work our way up from the bottom. So as we go higher, we can see that they held a 50% pullback, rallied up to a negative 23 target. Pretty much perfect, right? So we'll go to the next one. And then just for sake of ease, so it doesn't drive me freaking nuts here, I'm going to set this to price. So then we went to the next one. We had a pretty deep pullback there to a negative 618, but it did rally higher with continuation. Broke away a little bit further. And this time around, it didn't even pull back, right? The first time it's actually pulled back still didn't even come close to the 382. So a lot of times we're seeing a kind of an acceleration to the upside. Now that the sellers are starting to break down, we're breaking through the negative 50, the negative 618 for the sellers. We're having, we're basically just showing that the buyers are gaining more and more and more confidence as time goes on. We do also, before I forget, have a potential top of a channel or wedge there. I doubt it we're going to get that extreme to the upside, but you never know. So now that we've got basically everything locked up in there, now we have a little bit more of a backbone in that we don't have a lot of fibs to work with right now. We might have a shorter term fib, something like over here, but that's really about it. So we're coming off of a 382 to the upside. We're at the negative 23 target that's already been hit. Generally, a 382 hold is going to go for more, so we could be looking for a 382 or even a negative 50 to 61.8. But we'll kind of have to wait and see. We have a really strong rally to the upside. Could be looking for a deeper pullback. Now, until we start actually seeing some pullback movement, I'm not really going to waste the time drawing a fib off of the bottom, just because we could just make a new high and then I have to adjust it. And then it could make another new high and then I have to adjust it again. It becomes tedious. So to avoid that, I'll just wait until they actually start pulling back. Nice and easy. So that gives us our overall movement. We don't really have any bull fibs to worry about. All of the targets to the upside that the buyers were using are basically done. So now we're just waiting for a deeper pullback at some point whenever that wants to happen. So the next thing that we need to find is horizontal support and resistance to give us an idea of what we're looking for there. So we're looking for any levels that have multiple confluence tests, meaning that the market seems to want to come back to it and respect it either as support or resistance, and preferably both, like we have here, right? Nice levels of resistance, resistance, resistance all the way through. That'll be very interesting if the market wants to come back and retest that. So that's kind of the zones that we're looking for here in terms of levels of interest for the market on the support side. Now, we do also want to make our way down and look at some of the more, involved areas. These are more short-term. They happened over the course of a few days. We also want to find the ones that line up for, multiple weeks. So we want to load those up. This one looks pretty good if we anchor it a little bit higher. That gives us the most tests. We've got inside here. We've got inside there. We've got there. All inside here is support and resistance. And later on when the market came back to it, it respected it as well. So that does look like a pretty nice zone of interest to keep on the charts there. Let's see here. It looks like we might have something kind of coming through here as well. Let's see. Can we get a little more price? Let's start here and kind of work our way. Looks like I might need to be a little bit lower. So my job whenever I'm looking at these horizontal levels of support and resistance is to get as many tests as I can without making it look too crappy either, right? Inside here it looks really good, and yes, it did break down, but when it went back above it, it held it as support again. When it came back, we've got support and resistance. That's the kind of stuff we want to see around these areas. So although it may not be perfect, we know that it's going to be roughly right around this area, which looks pretty good. And as we go into future price, we can see that it broke above and used it as support and resistance. So that is obviously a zone of interest. If we go a little bit higher, let's see if we can get a couple other areas in here and see how this one just doesn't look that good. We've got a few tests inside there, but largely the market seems to break above it, use it as a level of support, and have a little bit of an issue. Hang on a second. All right, we're back. Sorry about that. It's the perks of working from home. Sometimes the mail shows up at the wrong time, or your kids are screaming in the background, or you name it, right? Anyway, so really what we're looking for are levels of interest. And here we haven't drawn up that, although it does hold, kind of, it's not that great, right? Every time the market comes to it, it doesn't respect it as resistance. It just breaks above it, uses it as short-term support, and breaks down. Same thing over here. It doesn't use it as resistance. It uses it as support and then breaks down. This time around, maybe you could call it resistance, but this is a good example of a level that just isn't good enough. We need something a little bit more than that. So as we go a little bit further back, let's see if we can find something inside of here. Generally, these turning points where you have a strong breakdown will create levels of support or resistance inside there. So let's see if we can get something that fits in there nicely. That looks pretty nice. So here we can see that we have a level of resistance, 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 support, 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 and then we have a sharp breakdown. We could be looking to use this later on. That's more what we're looking for. Now, as you add more levels, when you're going backward in time, you need to make sure that, you know, your new levels do work going forward too. Just because, like as an example here, this level of support, actually it'd probably be closer to here, just because this level of support looks really nice through here, right? That happened in early 2018. Going into this year, it might not look that great. So whenever you're going further back and you're inside some of the other levels that you've previously drawn already, just be careful, right? You want to make sure that they still work going into current price action. So here we have another nice level, 29.18 beautiful support and resistance through there. And just because we don't have really much else to work with, obviously there's something on the highs that we can worry about. And maybe if we go back far enough, the market will give us something there, but I don't have that much chart data on here. So we'll keep an eye on this high up here since we do have two tests at least. Maybe when the market wants to come back, it'll give us something to play with. Actually, I kind of want to move this down a little bit further to right around here. And the only reason I want to move it down there is because that gives us resistance here, here, a near test here. But if you look really close, you can see that that level acted as support, resistance, kind of support and resistance inside there. It should be relatively interesting. Now, I don't want to lose track of this one either, so we'll keep that there. And that's all we need to do. So generally speaking, now that we have our full outlook, we have the idea of what we're looking for on the S&P, what we're looking for in generally how to draw up the backbone of the market with the trend lines and the fibs and all of those. Now we need to just find some hot spots that are of interest, right? So the easiest way to look for hot spots of interest would be waiting for something of you know, a lining up, if you will, where things really start coming together. So if I were to draw a fib from here, and this is just an example purpose, but if I were to draw a fib from here, that looks like this is about a 786 pullback. We also have rising support, we have horizontal support. That's what I mean by a hot spot. Everything is lining up in the same place, where if we do get a sharp pullback, that could be a very big area of interest going forward. And that's one of the best ways to kind of plan out your trades, is waiting for these large areas of confluence and then zooming into a faster time frame to see if you get some form of a signal, whatever your trading plan is, to look for those types of areas of support. But that's how I draw up these larger time frames. This is a 60-minute chart. There's nothing on it. There's not even moving averages. It is a Heikin-Ashi type of chart, and the only reason I do it that way is just because it's easier to see the swing highs and lows when you zoom out. When you're looking at regular candles, it can be a little bit kind of confusing, and well, should I draw it here or maybe here or maybe here? It's really obvious. That's where I'm drawing it, right? Bingo, bango. So do you have to use Heikin-Ashi? No, anything really works, especially when you're zoomed out this far. But anything that makes life a little bit easier, I'm definitely going to go for, especially when you have a bunch of them that you have to load up. So that's going to do it for just kind of marking up the charts and generally how I like to plan out my trades for longer term areas of interest, like a 60-minute chart zone of confluence, kind of like we were just talking around that 2745 half area in the S&P. So that's going to do it for this one. I hope you found it interesting, useful, entertaining, maybe something you can add to your tool belt. As always, underneath the video, make sure to subscribe to the channel so you don't miss anything important. And to make sure that you don't miss anything important, click the notification bell icon as well so you're notified when those videos come out. That's going to do it for this one. As always, enjoy. I hope you had a great weekend. And going into the trading week, hopefully you have a fantastic trading week as well. Have a good one. We'll talk to you all later. Thanks.